Right. Certainly, the valuation on Apple, considering all of the hype around it, still, an argument certainly can be made. Out of curiosity, do you look at the market cap? Is that something you even take into consideration, and does it give you any hesitancy whatsoever when you see, the market cap has gotten so large and it's still...
the market cap to me is irrelevant because to me what I'm more concerned about is what's the potential market cap. So in other words, as I said, they've got 3% of the total cell phone market. They've got roughly, a little bit more than, roughly around that level in terms of the PC market. So they have a big market cap, but if you look at the price-to-earnings ratio, it's a teens multiple for this stock. And if you look at the S&P 500, that's got about a mid-teens multiple. So I go, so let me think about this. So I'm paying a mid-teens multiple for the S&P 500 where I've got revenue growth of at best high single digits this year. Or I can pay, 3-4 multiple points higher than that to buy a company that's growing revenues at 30% a year. I think I'll take the latter.
Right, absolutely. Okay, another name, I guess, do you have an opinion on RIMM? It used to be such a kind of a hot stock. It had, a ton of buzz, and, the company is still, a major player in the smartphone market, but is Apple kind of taking the luster off of RIMM? Or do you have any opinion whatsoever on that company?
Yeah, I don't think RIMM's going to have a problem this quarter necessarily, but the issue I have with RIMM is in some ways the same issue I have with Nokia on a longer-term basis, which is that people want to buy products that are easy to use. And the RIMM web browser experience, in other words, if you want to get on there and surf the web, it's not as intuitive, it's not as easy as using an Apple product. And the big advantage they've had is that, a lot of corporate email systems didn't support the Apple products. And that's really changing because so many consumers now and so many CEOs are buying either the iPhone or the iPad that's really driving people to adopt it on their corporate networks. And I'll tell you, as soon as our corporate network adopts it, I'm going to switch. Because it's just whenever I think, and I hear this story a lot where, the husband works at a company, the corporate email system uses BlackBerry, and I do love the keyboard for typing. That is one thing I do enjoy. But, the wives of the rest of the family will have, an Apple system, and it's just a lot simpler to use. And so, we actually have that in my household as well. Funnily enough. But I think that's going to be the big problem longer term is the product development. RIMM's not making products, just like Nokia isn't necessarily making products that are capturing people's imagination, and the market, to some extent, is getting away from them, in my opinion. So, we'll see what happens over time, but I think RIMM's got a big problem over a long period of time.
Right.
Especially as Apple becomes more accepted on the corporate platforms.
Yeah, I just brought that company up because, like you said, it wasn't that long ago. RIMM was an extremely hot stock, and it performed tremendously. And now people are starting to throw it out there as a short candidate. Now,
well, you have to remember. You have to look at how fast Apple is growing, and that's part of RIMM's problem is that the buzz has moved from RIMM being a really cool product when you're in a world where you're texting or you're firing off emails to each other, to if you're moving to a world that's more based on getting on the internet, doing searches and all that stuff, Apple's much better for that. So I think part of this is as the way we use the internet's evolving, and that includes the iPad, for example, in terms of you're watching more things on it. Apple's just a better platform to get what you want to get done.
Absolutely. Now, you brought up the internet, so what I've been seeing is a lot of these stocks that are leveraged to the internet it's like the one area and this is a very short time period, but over the last month and a half, let's say, and I mean a lot of these companies have been doing terrific, throughout 2010, 2009. Talking about Netflix, AKAM, Salesforce.com, these kind of companies that their businesses are facilitated in a lot of ways over the internet. Do you have an opinion on this sector? Because like I said, it's been one area that's been outperforming.
Sure. Yeah, I mean, if you look at those companies, Akamai is one that we actually own, and we have an investment in on the long side. Netflix is one that also we did own, and we plan on owning again once the stock sort of settles in. The combination of much faster broadband speeds and the convenience of downloading things like movies as it's getting easier to do things like that, and as the payment models get sorted out, is driving a lot of business from sort of the bricks and mortar companies like the Blockbusters, which, as you probably know, is fighting to keep from going bankrupt. Movie Gallery did already file for bankruptcy. And a lot of consumers are switching to downloading things like movies, etc. And if you're in a tougher economy and you're hosting and you want to have more of an online presence because it's a lot cheaper than actually having to rent physical real estate and put your products there, then a company like Akamai that can help you with having your web presence, they're going to continue to do well. And so I think a lot of those trends are still, have a long way to go before they finish playing out. And in some ways, everything gets affected by a recession. But on a relative basis, my hope would be that companies like those will do better as people try to find ways to save, money. They shop more online. They're downloading movies when they need them as opposed to paying late fees at Blockbuster, etc. And so, those types of models will benefit. Or they're advertising more on the internet because you can measure it and only pay for, the responses you get, etc. That's why I think those models will do a little bit, better going forward. But, you're paying high valuations for them, and I think that's something that your listeners need to be aware of, and there are going to be definite hiccups along the way, and no company escapes if there's a tremendous downturn. But, the hope is if this is more of the, if this is a slowdown as opposed to a complete meltdown, then hopefully those names will do a little bit better than some of these others.
Okay, well, I guess maybe we can kind of go full circle then, Dan. I really appreciate your insights on those companies, the sector in general. Now, I know that none of us are able to see through the windshield with it's very difficult to predict going forward. But how bearish are you as far as we talked a little bit about some of the indicators that suggest maybe we're hitting some road bumps. Another thing that I've been looking at is the housing numbers. Toll Brothers came out, said business has been weak the last couple of weeks. And some of these things, obviously I think there's a lot of jitters out there. So, on a big picture level, how do you think this is going to turn out? Are we going into a double dip recession? Is it going to be S&P 800 again, or 700, or what's your opinion?
My opinion is very simply this. We don't know how healthy the global economy is because the global economy is shot up on a bunch of morphine. And what I mean by that is it's akin to for anybody out there who's had surgery, or you get a terrific, accident, or you break your leg like I did, and they shoot you up on a lot of morphine to make you feel better. So you feel pretty good. And then that stimulus starts to wear off because, it's addictive if you stay on that, right? And it comes off, and then you start to feel the pain. That's the point you figure out if you're actually better or if you felt good because of all this stimulus.